Good afternoon and welcome to the end of day review for today. And today is Friday. Today is Monday, April 29th. It's the first trading day of this week. And 2 more days, or actually 1 more day tomorrow, we close our April, which is the first month of the second quarter. And this week is huge. We call FOMC meeting today. They will start the meeting tomorrow, and then Wednesday they will by 2 p.m. we will know the decision, and then the Fed chair Jerome Powell, he will have the conference right there, press conference at 2:30, and that's where we're gonna see a real move. So let's see. It's a huge move, huge, liquidity reject into the markets. Very interesting, week to watch. And also we have a huge, earning week also. Last week we already have huge earning from Apple, not Apple, I think Microsoft and Google. And this week we're gonna have Apple. We have a earning on May 1st, Wednesday. So that's huge. We see how Apple doing. But so far, big tech doing good. Microsoft and Google doing great. Magnificent Seven, which is I think Facebook not doing really good, but really Microsoft and Google saved the day right there. And that's the calendar we look for FOMC meeting this week, April 30. And then we're looking for the non-farm payroll in May 3rd, right here. Right. This week there's nothing special about option expiration day right there. And then after that, we're looking for the CPI data again, which is on May 15th. I think that's the third Wednesday, right? The third Wednesday. It's always the third Wednesday. Oh, so last time we have is at April? I think the second. Yeah, the second Wednesday of the month. In this case, it start from April, so they don't count this as a second. They count this as second Wednesday. Is that right? Is that right? CPI. Yeah, you see the 10 right there. So the second Wednesday. So basically, for this overlap between April and May, they don't count this week. It's the first week of May. The two count is the week of April. That's the reason why it's the second Wednesday. Otherwise, it should be go at we should go to May 8th. But in this case, it's the CPI is not May 8th, but in May 15, 1 week after that. And then we go back to the end of month. So we have beginning of the month, which is the non-farm payroll, and the end of the month you have a GDP data. So basically, we just play around the economic calendar or event. That's where the market's gonna move because it's inject the liquidity. Because liquidity bring the liquidity or bring volatilities. The markets, stay volatile. So that's where we want to catch the move. That's the whole idea right there. Alright, so when we go start this today, right, we see the graph up, right? Then we look at ICT model 212 to see how it's behave. We anticipate a U.S. swing at 9:30 to take out the previous day low or high in this case, in our case, in today's case. We anticipate it's open. Hey, it's the Sunday open right there. You see that? The open right there. It's coincident with this level, also the high time frame. But we can give us some idea right there. Let's give a note to this one also. It's also a week open or Sunday open. What matter? That's beautiful. Sunday open exactly. See that? 51 40 25. Exactly that level open. Well, we anticipate a Judah swing. It did take the high right there at 9:30 and go down and fill the gap, but it did not happen. But you know what happened? We have a diversion, smart money diversion. That's which way it not fill the gap in the morning, but it did fill the gap in the afternoon. And ICT model did give a notice right there. IM, wow, he said avoid IM also because it's so beautiful and he said very accurate. So if we stay out of the AM, we anticipate the fill gap in the PM, then we can catch the huge move. Because basically in the PM you see a very toppy, but the PM is move right here. If we catch this move, it's a huge move. If, let's say we get out in here, we get in right here. We did get in right here. So let's, we can review the trade level, but we did get in right there. And, we can have a huge move. Look at that move. Man, who have thought of that? Who have thought of that? So look into the lab. Well, we see the huge displacement, right? Displacement up, displacement down, and retest the level. So it's a critical level right here. Let's mark this level. So what the high of this candle, my friend? What the high is? 51, 22, 25. 51, 22, 25. 23, 25. Not 20. 23, not 22. Hold on. 23. All right. So we have 23 and 25. So see right there. So this is the breakout level. We're gonna look at that displacement up, displacement down, and then you see what happened. It retests level and it make like it fell. But actually that exactly moment we put a buy stop, and it have a fair gap up, and now it just retest that level. So if we target this level, for this matter, we still have a huge range. Look at that. But it did fill the gap for the open right there. So the whole idea that the ICT model set up right there very accurate. It's very accurate. Let me choose the right there. All right. Yes, so we can catch the 20, 5R right there. Our target only 3R. 1R is 5 point, which is $200.50, $250 right there. But in this case, 5R, that's huge. We did get into this trade. We will go to the detail later. But the idea that we get out early, we get out at this candle, we thought it can be retraced, but we mistaken. We get about 5 point, which is around 1 hour, less than 1 hour. It should be okay because we got 3 hours for today for our purpose anyway. So the whole idea, the set of ICT very accurate. If we see the gap up and we see a little bit top PM morning, be patient. Wait around here. You see the out here. Here's the lunch time. As soon as we see the around 1:30, it break the lunch time right there, right? It hang above the lunch time. It break the lunch time and you see a hanging dozy right there with a sell top right away, because this is exactly where it's gonna break down this level, or it's a full breakout. It's not gonna break this to the upside. It's full breakout. We see this signature everywhere now. We used to be take a long position right here. The reason is, oh wow, it's breakout level. It's very big displacement. You see that? Wow. And then you see a open above the level and retest. Wow, it's gonna go long. But that's exactly where the full breakout happened. It's not gonna break out the level. Put a sell stop. You know why? Because if for the logic, right? If it's breakout level retest, it will break out. There's no reason for the markets to go to this level again. The only reason it go down to the level again is to break it down. Break the level to the downside, not to the upside. And that exactly we use the market, not the market order, we use buy stop order. It's so effective. If we wrong, then you know what? We will not carry into the trade. If we go shoot up here, then it never fill our order of sell. But if it did, then we right, then the market will break down that level. It will fall break out to the upside, but it will break down to the outside. So we see this signature everywhere. The same level, like you pick up big level. You see it down here, and then if we look like a forward, you put buy stop right here. It will take us there. And the same right here also, right? Breakout level, and then the doji close below. It will be perfect if it retest right there. So we see the signature everywhere. The same right here. Break it out, retest, and we did take a long vision right here. We got the right here. We did take a short vision right here also. Did we take the short position? Yeah, because we see a we see a we would buy sell stop right here at that level, because that is the Friday PM high, which in this case Friday. The same idea. You see it break out the level, it create the idea that it's gonna break, and in the real time this candle is huge up there, but then it's flip, and we believe that we check the profits. Is that right? We check the profits. Yep. So go back to the ICT model. It's right there. It's very accurate. We should anticipate, and we put one more note right here to make it more beautiful right here. All right, let's say something right here. Okay, let's put it right here. So we're gonna have space to put a note right here. Well, basically the note we want to say right here is, how do we anticipate, how do we know that it will not fill in the AM and wait for the PM? And when exactly the signal tells us when the PM gonna happen? Yeah. So look for the UDAR. You can say that. 130. which is this model. These two model related right there. Is that right? No. This model related. Euro swing. Euro swing at 8:30 as 1:30, but it's not really a huge swing at all. But look for that. Right? In this case, it may, maybe 1:30, or you see the huge swing take out the lunchtime liquidity. Yeah, you see that there. Yeah. Yeah, it did take the sell side. So looking for the swing, looking for the Euro swing. Maybe around, this, or 130-ish. Precisely, right? Precisely. Yeah. It rate the and then expansion to the opposite direction. Yeah. We already know the logic that we don't need to add in there, but that's one of the trigger we need to looking for. Looking for US swing to we can say create a liquidity, can be buy side, right? Liquidity sweep only, and then it will be expense or reverse, just reverse or expansion, right? The whole here to the opposite. Yeah, beautiful. Which is it happened today. What's going on? Okay, can we make it? Yeah, we want to. Can we see that better? Oh well. Yeah, looking for the Euro swing at around 1 p.m. or 1:30 p.m. ish to create liquidity sweep and then revert to the opposite direction. A liquidity sweep and then yeah, okay. Yes, that's what happened. He said avoid PM, which is exactly on Monday, especially on Monday, right? That's exactly what happened today. So accurate right there. It very often happen on Monday, which arranged there right there. Especially on Monday. Watch out for Monday. leave a note right there. So that is our observation right there. That's another condition right there. If we meet this condition, that we're perfect. So we can anticipate right there. For today is perfect example right there. Perfect. You see that? The euro swing start around here, and it soon it break the buy side, it sell up right away. And look for the breakout level right there. Yes, it's full breakout at this level. 51.4975 right there. Alright, let's see how do we doing today. Today we're doing great. We're very grateful for the market. Market give us a very good setup, and we take advantage. Maybe we still leave leave a lot of money on the table, but that's okay. We've called for the beginner, for a novice like us, it's normal. And we have to manage our greed right there. Because if we want to take all the money on the table, we have to be careful, because that will be full our greed right there. And we don't want the greed right now. We just want maybe small win and adding up. That approach is better for us at the beginner. Otherwise, we just want to hit home run every trade. That's even though they say you let a winner run, but that can be a tricky for the beginner, because that we easy make a fall into a greedy trap right there, which is we expect every move is gonna be swing move high for us, and we forgot to focus on our goal, because our goal for the challenge very very conservative, right? They give a $50,000 account, and they wanted to make $3,000 for 1 month, a month, which is 6% right there. So the challenge is for the top step challenge that we are taking right now. They give a 50,000 K, right? And the target for it is 3,000. So 50 out 3,000 out 50 is a 6%, right? It's a 6% right there. 6%. Only 6%. And for per month, right? The requirement is per month, because every month it will reset our account. So per month. So if we set our 1R right now, our 1R is 5 point right there, which is 5 times $50. One bond is $50. So 250. Right, and our target is 3R for per trade. Perfect is 3R, which is 15 bond, which is $700.50 right there. So that's today we almost get 5R. I mean 3R. We around. I think we got right here. Yeah, here's our for today. I mean this account. This is a practice account. This is the real money, real challenge account. Right? So we got almost 3R for that matter, right? Almost 3R. Exactly. Let's divide it. 1R is 200, right? 250. So divide, so we have a so basically this is exactly how many are, right? We want to to the precise fraction number. So basically we use 6 37.50, and then we divide by 1 hour. 1 hour is 250. That's our 1 hour. Right, we're willing to risk 1 hour, that 1 hour. So it's about 2.5 hour, it's not 3 hour, which is good. So that's our performance. But the amazing thing that today that all the trade we take is we have a win rate is perfect today. It's 100%. That's amazing, right? The trade we take for today right here. Today is April 26th. You see, we take 1:11 to 18, so 7 trade. That's 7 trade. No. Oh no. We take right here. Sorry, today 29. That is Friday. Friday we take 1, 2, 3, 4 trade, and today we also take 4 trade. 1, 2, 3, 4. And amazing that today we're making history. We're making history in the sense that we have a 100% win rate. So the first trade is profit. It almost break even, but it's come out good. Second trade. So we can see that right now we're happy with our strategy, which is small win, adding up instead of let the winner run. So that's our approach we do right now, and we are, more than half of the way right now. So right now our right here is the target is 3,000. Right now we 1,800 something right here. So we're half of the way right there. We just need one more good trade where we can get 3,000 and pass the challenge. So we are in a very good position right now. We are very grateful for what whatever market gives to us. If we give it a win, we celebrate. If we give a loss, we also celebrate. That is the mental approach we need to have. Otherwise, we will feel irritated, we upset if we lost. Loss is a part of the game. We have to welcome. We start our day with the idea that we will lose. The loss is there. So when it happens, we don't try to get revenge trade or get stuck with that. It happens too easy to associate ourselves with the emotional attack with a loss. And let's be honest, no one wants to be lost, especially men, right? That's the reason why they say women in trading do better, because women have less ego issue than men. Men, we want to conquer, we want to win. It's very hard to accept loss. But in this kind of game, or trading for that matter, we have to learn how to manage our ego. It's not easy, it's very challenging, but with practice, we can manage. And that's what we try to do. There's no way we can completely remove it, because human is always there. But a better approach is just try to manage, aware that it is there. So when it arises, we know how to manage it. Don't fight it neither, because the more you fight, the more you feed it and make it stronger. So don't fight it, to feel it and let it go through you. Then we can be a better person and we will trade better. And today is a good example of that. Alright, so the first trade we do have is I look our swing shot. Yeah, no, go to the we're gonna play the recording we do, so it's easy to review them. So here's the open 9:45. Okay, so it shoot up. We did miss the trade right here at 9:30. So basically at 9:30 we see Breakdown. Yeah, we made this move. The reason why is right here at 9. Right, let's see what's the at 9. Okay, so here's is at 9:30. Okay, so it's a huge swing up, but then it flipped. So yeah, it's huge swing up, then it flipped. Let's see. You see huge swing up, and then you see all of a sudden it flipped. Well, at this moment, we almost put a sell stop right here, because we know that the market always in the high time frame, which is the daily time frame, when it reach this level, it will be the first try up. It will fail for the first try for sure. So we think about short that right there. That's the idea. Go short right there. Okay, let's forward right there. Yes, we did measure. You see, we have to measure here. Want to see what is our stop line going. But right here, we do short right here. As soon as we see that level flip, we do short right here. We put in a sell stop right here. Because look at this level. Is break this level with this displacement right here, and this open above this and retest and go up. There's no reason to go down. If they go down, that means it's gonna break that level. So that's our idea right there. And when we go in at this level, we anticipate our target gonna be the new week opening gap right here on Sunday. But look, the beauty right there. Wow. So we did go in. You see that? We did go in alpha trade when we sell top right. Look again. Yes, you see that? We get carried into the trade a little bit right there. Okay, right at that moment we put a sell stop right here, because our logic is that, well, it opened above and you already retest this and you go up, huge down there. That's no reason you go down. The reason you go down is you break that level, and that's how we check the trade. Yeah, we get execute right there. Yes, so we get in that level, and let's see, and we anticipate to fill out, but it did not. And the reason we get out, because we see the diversion on the smart money. So the NQ is filled up, but the ES not filling it up. So that's where we get out. I think we get out just right here. Let's look at the, I think do have say we did have a screenshot, so let's see what do we put right there. Okay, so we entry at 10. Is that 10? Oh no, we entry. So we entry at this candle we did 9:30. Then only we exit right here at 10. Yeah, we exit at 10. When we see they candle go up, we exit them. Yeah, so we get a I think 1 hour buy stop. Oh no, buy stop at 10. No, that's buy stop at 10. So we go in Okay, so right here, yeah, we exit here in the next candle. So we go in at 30, we go out at 45. The reason we want is to follow through. You don't want this candle to do anything above this level. That's our logic. We want it to retest level and fail, but it's at that moment is above that level, so we get out and take 1 hour profits right here. We exit exactly at 45 candle, but at the moment it's at 50, 57 right there with 10. Yeah, 9 Central Time, which is Eastern Time, is gonna be 9:57 right there, and we get 1 hour. 1 hour of our trade right there. Is that right? Is that 1 hour? The first trade? Yeah, the first trade we have right here. We get 1 hour. Yeah, more than 1 hour. 1 hour is 5 points with $200.50. But that's we had 1 hour. So we get 1 hour. Yeah, we had 1 hour. No, not this one. Yeah, this one. So we get out of there. We go in at 9:30. We get out at 9:45. The reason why, because we anticipate it's gonna fill the gap, right? According to ICT setup right there, we anticipate with hard, because we anticipate right here looking for a 9:30 euro swing, take out one side, and with hard it's gonna be this one because it take out the liquidity buy side, so it's gonna fill gap. So we wait for it to fill gap, but it did not happen. And the reason we get out because we see the diversion right here. So the NQ fill the gap, and the ES not fill the gap. So we get out. We get 1 hour, and then we go in again. And the reason we go in again at the 41, 5143.5 level right there, because we saw this signature. This is a standard signal candle to go along at this level, because you have a displacement down, you have displacement up, displacement down, and the signal candle open and close below this level, and look like it's fell. It's a dozy right there. Then there's no reason for it to go back to that level. The only reason you go back to level is to break that level to the upside. So we would buy stop right there, and I think we do document. Yes. So we do the buy stop at that level, and we get entry at 10 right there. We buy stop at that level. That's the whole idea right there. So this is a signal candle. Yep. We see that everywhere now. And when you see that, people say that you cannot unseen it. That's the reason right there. When you see that, we will not unseen it. Right there. So we see the signal candle is at 9:45. That's the signal candle. Can we put a note right here? And we already see the diversion also at 9:30. Because at 9:30, is that right? At 9:30? Yeah, at 9:30 we have a diversion. So it's a very beautiful setup to go along. So we do see that right here. The 9:30 it created diversion in two ways. The Nasdaq fill the gap and make a lower low, but the ES did not fill the gap and make the high low. So that's the diversion in terms of gap fill, and also diversion in terms of the lower low and higher low right there. So it's a loss of confluence in this trade app, and we did go long. You see that? Our target should be here. It already fell, it should be here. But, we are thought that it's going to be another expansion move. Next time we do better because, Monday, right after the huge week next week, it's not going to make a huge move on Monday. We should precisely take profit right here. But anyway, we come out with like break even for this trade, right? Almost break even. This is second trade right there. Almost break even. But if we are equipped, we have experience, we will target third trade there. So we have 43 and 50. We have 7 point right there, which is more than 1 hour. Instead of get a break even, we can get 1 hour right there. That means we pocket 2 hour right there. After 2 trades, we have 2 hours. But it's the lesson learned for us. Yeah, you have a very precise signature right there. Whenever we see the level, you see the displacement down, and look into the left, you see the displacement up, and now you see a signal candle reset level, close, open, right, open below, retest and close below, then that's the signature exactly we need to go in long. Before we discover this, we always go short. So we call the loss is there. Wow, it's break out the level and now it retest, it fell, and surely it's gonna be soaring, right? It's gonna selling, it's gonna come down, but it's that exactly the moment it need to go long. That's how the algo is run. It's how it's programmed. So it show us its hand right there. To just follow that and making money. That's it. We see this temperature everywhere now. So let's put a note right here. So now we see the note everywhere, my friend. But where we put the note so it's easy to, let's put right here for that matter. So we signal candle. It's 09:45. What could be better? Time is alignment right there. And know that it is right open below the level, which is in this case is 41, 43, 50 right there, and then what? It tests it retests it retests, it fell, right? It retests, fell, retesting. Oh, come on. Okay, let's do it. It retests, it fell, and close. A little bit hard to create a very precise language or verbiage right here. We don't want too long, but at the same time we don't want too short. It's very hard for to digest what we are trying to say. Maybe 1 week from now, 1 month from now, we forgot what is that. Or some other people read our note, they have hard times. But and close below it. So that's it. Exactly we need to go long. Exactly we need to go long. Yeah, that's the beauty right there. I think we are successfully decoded algo right there, my friend. Welcome to the game. Yep, so you see that? We go long right there, and we just moving our stop loss, and we get almost break even. We should get 1 hour right here. We're a little bit naive, right? We expect it's going to be, wow, huge move. We're going to look at that moment. You see that's the expansion. We thought, wow, it's going to be, it's going to be breakout, huge. And we're so excited. But now look back, we should target right here exactly. Because look at the model that ICT gives to us right here. The gap, he said the gap going to be filled. So if the gap not going to be filled, it's not going to rally up. So that is another lesson that we learn from here. So we see that, so we go long right away. You see, so now we know when to go long and when to go short. You see that? We go long at this level, so accuse it, we go short, and as soon as we get out, we go long. We see the signal. So now we have a better picture, or we have more clarity that's for lack of a better word. We usually be very confused, but now we have more clarity. We have less confusion. That's the beautiful thing to see that happening, and it happening in real time. All right, so that the second trade we take, and we'll get break even when it's retrace back, and then we exit out. Yeah, we exit out that trade at 10:30. Right, at 10:30 we get out. That's the second trade. You see, it retraces back, and remember we are entry right here. So it's close our entry. Come on, get out. What if we don't get out? We take a loss. We learn our lesson. We're not gonna take a loss after we are in the money. You see that? It stop out right there. If we don't take, you see we're going, it take out stop entry right there, and we take right there. Let's say we put a stop loss right here below this, we still get stop out around 11:30 there. So it's a good decision. We missed our target. We should set a target right here, but anyway we come out break even for second trade. And then we see another setup right here for our third trade. How do we go in the third trade? Let's look at the recording. Okay, so we're going second trade. Wow, it looks scary, right? But come on, yes, we're going. And look at the giant move. We thought that, wow, we're gonna break out, but no, it come back. So we see that there, we get out at 10:30 right there. We get out. If not, you see, now it hit our entry right there. Yeah, and it come out. Yes, so if we don't, we pay the price right there. But now here we see the setup. See the setup at this level. We guess right. Let's see. Okay, now we go in. We go in at 51.43 again, because you see displacement up and then close below that. There's no reason for it to go into that level. Only go back to break that level. So that's the reason why. You see, and a huge rejection down here. So we put our buy stop. I think we put at a level. Yeah, we go in very early and very close to the entry. To the price action. You see that? So it's break down the level, and then this is the signal candle to go in right there. It retest, it felt look like gonna break it out. That exactly we put a buy stop right there. And we go in at second trade. We go in at And at the same time, we see the diversion at 11:30 right here. This is 11:30. Yeah, we see the 11:30. We see the smart money diversion at 11:30 also. We see that swing right there at 30. That give it the signal to go in, because if tested level it fell, right, and also it's create diversion right here. Make a higher low for the Nasdaq, but for the NQ, for the ES, make a lower low. And that's where exactly we put the buy stop right here at 51.42. And now see the recording, we will see that. We had so much fun today. We really do. You see, there's no reason for it to reach, go back to the level. The only go back is to break that. And we see the logic. You're going to see the logic right there. You see, it flipped the candle. It carried us into the trade. You see, right? We put a buy stop right away right there, and it carried us into the trade. If we wrong, then it break down this level. It never hit our order. But if it hit our order, that means that it will go to that direction. Exactly. You see, it flipped right there. We have a signal candle and we have a diversion. So we have everything we need to pull the trigger. It looks scary a little bit right here, but let's see. Yeah, it looks a little bit scary right there, but we got into the trade. And let's see, I think we get out up here also, because we see it's very weak right there. It's supposed to follow through. Oh yeah, I think we get out of that at that candle. Is that we get axis out? Where are we? 45. Yeah, we go in at 45. No, that's not 45. 12 something. Yeah, we're going at 12:30. Okay. Okay. And we go in. Oh. Like we hit our, wow, that's okay. So when do we exit out? That's 3. Oh, I see. This is where we exit out. Yeah, I think we got stop out right here. We got stop out at X6 by stop. I think that's kind of a stop out right there. Yeah, we put a stop loss somewhere around here. This is the trade number 3, right? That trade number 3. Yeah, trade number 3 right here. Yeah, we get a half an hour, more than half an hour. So we exit this, we go in at 11:45, and we exit at 12:30. So we go back to the chart. So we go in. We go in. Okay, right here. That 12. No, right here. Okay, we go in right here at 11:45, and we get out at 12:30. Right here. Yeah, exactly this candle. Because we're afraid it's gonna be it retracement at 12:30, and we get out of that. We get half an hour right there, more than half an hour. We get out right here. That's right. If we don't get out, we had trouble. It come back to our entry right there. Right. So that's an idea. And the fourth trade we go very perfectly, but we acted too early, my friend. You see right here, the level, it break that level, and this is the signal to go short right there, not go long. And we put a buy stop exactly, a sell stop right here, and it carried to the trade, and then we move our stop loss touch above here, but we get out right here. We make an error right there, because you know why? Because we should not get out, because it's gonna create value gap. This candle gonna create value gap after displacement, and this candle always serve as a signal. It's gonna be three tests, but if it's a doji, then we need to get out, let it form. But we didn't let it form at all. We just, as soon as we saw it starting open, we get scary. Otherwise, we had a huge move right here. We had a huge profit, 28 points, but we only get 4 points, which is almost an hour right there. We get a, you can look at the, right here. See that? Did we show that we get in the trade? Yes, right here. Okay. And not yet. Okay, not yet. We're not getting here yet. We get in right here. We let it go, and then go to, we anticipate a Euro swing at 1 p.m. and that's what exactly we're going right here. You see, it looked very impressive, right? But that's exactly the moment you see right there. So we put our, yes, we know identify level. We put a buy stop right there. Buy stop right there. Sell stop. It gives us sell stop. Yeah, right here. We take a screenshot right here. So we put a sell stop at this level. At 15 right there. Sell stop. It gives us buy stop. That doesn't look right. But let's go to the yes, we get in and we move our stop up. Yeah, right here we did that. So you see that we get entry at that level 51.49 right there. Yep, 51.49. 51.49. Right here. Yeah, 51.49. We did entry right there. We put a sell stop right there, and it carried to the trade. But we are not stay with the trade line up to get all the money, so we left a lot of money on the table, which is okay. You see that? We move stop loss right there. We should let that stop loss. We did move them, right? You see that? And you see that? As soon as we saw the candle, we close operation. We should not, because let it create a value gap, and this guy, if it have to be closed below that level. If it's gonna be a fall breakout, it's gonna be a doji candle, but we learn a lesson. But if a displacement, then we're good. You see that? We're so scared, but the minute we close, we start moving direction that we are anticipate. And look at that, man, look at that. You know, we have huge right there. Look at that. Wow. But you know what? After this, you can put a buy stop right here. You see that the idea is you get rejection, and then it tested level, it fell, we put a buy stop right there. We can go long again. I mean, yeah, that's the idea right there. Put a buy stop right here at 4. You saw signature. You saw this candle right here, the signature candle everywhere. That's the signature right there. That's the signal candle, the doji candle. Oh, yeah. Hold on, I'm sorry, we missed second at this level, not that level. But you got an idea. Yeah, we need to put a buy stop right here. If you never carry, then we have, but right here we do. We see the displacement right there. That's where, and you see right here, this is a signal candle. We spoke of this one, but this one actually a signal candle at the level. You see, it will close below the level, and the next candle, boom, it break. Just was exactly close below. You see the next candle, boom, break right there. Buy stop right here and target right here. We have, 8 point right away. So now we know how to trade now. Yeah, you see that? Get 8 point right away. See the signature candle open and close below. It actually fell. But the next candle, boom. But anyway, we're now out of time, and thank you for your time and interest. We always grateful for this opportunity, and we do what we love, and success coming our way for sure. Bye for now, and have a great evening.